Hi friends, in the short run, stock market may behave strangely, irrationally, but in the long run, if you invest in good quality businesses, good stocks, then believe me, you can easily become a profitable investor and can earn multi-bagger returns. This is not a rocket science, it's a simple common sense and research. And in this series, today we will be talking about a wonderful business known as Varun Beverages Limited. In this short video, we will analyze its fundamentals, its technicals, and its overall value for a common investor. And I assure you, by the end of this video, you would be having absolute clarity about the future prospects of Varun Beverages Limited. So please watch the video completely to understand the overall value, and I appreciate your time. So let's begin this wonderful analysis of Varun Beverages Limited on Sagarnomics. So before we proceed with our analysis, I just request you to subscribe to this channel on YouTube and click the bell icon, because I keeps on sharing such research-based videos with you, which may help you to become a profitable investor. Plus, don't forget to like the video right away, so that I can get support and create more such videos. Let's begin the analysis. First of all, let's have a look at Varun Beverages Limited fundamentals. So before we get into the numbers, I just give you a perspective of the company. This company manages PepsiCo's overall business in India, Nepal and nearby regions. And for 32 years, Varun Beverages Limited is the sole distributor and business manager of PepsiCo's overall business in India and the nearby regions. So 3 decades of relationship, plus the company is creating quality benchmarks and it's operationally very strong. So let's look at the numbers now. Mr. Ravi Jaipuria is the chairman of the company. He is a very well-known businessman. Here Varun Beverages numbers in front of you. So quickly, just have a look at this, the company's overall business. Let's just quickly look at it. So this is the part of the company's company is actually in 1990s. Mr. Ravi Jaipuria's Jaipuria Group has developed an association with PepsiCo, and the company's name was Varun Beverages Limited. So it's the part of RJ Group, Ravi Jaipuria Group. Now the company is also along with the PepsiCo, it is also maintaining the franchises of Pizza Hut, KFC, Cream Bell and Costa Coffee. You know, all are big names over here. Now the company is doing business in 6 countries. 3 are in Indian subcontinent, that is India, Sri Lanka and Nepal, and they are contributing to 85% of the overall revenues. Recently, the company has acquired PepsiCo's sole distributor in South Africa just to increase its geographical reach, and the deal size was around 1300 crore rupees. Now, company has a wonderful distribution network. It has 37 manufacturing facilities in India and 6 internationally. It has 110 owned depots. That means company owned depots, and 2500 company owned vehicles. Now consider this fact. The value of the data is nothing until and unless you make the business meaning of it. Now consider this. 2,500 trucks and the vehicles are owned by the company itself. That simply means that if the company somehow faces problems in the cold drink distribution business, then it can start running its logistic company also. 2,500 vehicles is not a small number for a fleet management company. Second thing, the company is having 9,25,000 visi-coolers which are installed in retail stores across India. So if you want to go to any retail store in any part of India, you will find a visi-cooler, a display window kind of cooler where the cold drink bottles are kept inside of it, and the customer can look at those and can directly buy. So 9,25,000, this is the number of visible areas, visible shelves for the company. Now you can consider that how much strong branding the company might have created. Sales revenue breakup, as you can simply see that the soft drinks, the Pepsi, Cola, contributes to 70% of its business. 23% comes from the packaging drinking water. It has drinking water brand with the name of Aquafina. You might have found it on airports, on railway station, and all parts of the country. Now, this has healthy backward integration. That simply means, now the backward integration is simply a business practice. That means from start to end, the major part of the supply chain is being managed by company itself in-house. That simply means that they don't have to depend for bottling making the packaging things, distributing things. They are managing it in-house. That results in two things. First, they save the cost. Second, they save the time also, and overall their business is running more efficiently. Now, there are less errors, more efficiency. Now, they have a wonderful association with PepsiCo for last 3 years, and then there are so many other things which I don't want to get into because of the lack of time. Now, let's look at the numbers of Varun Beverages Limited. Over here, you can simply see that it has 1,72,000 crores of market cap, which is a big number actually. 1331 is the current price, which is approximately equal to 52-week high. So the stock is running at the 52-week high price level, but doesn't matter because the company is doing good, so it has a right to charge the premium price. You can look at the PE also, 40 PE, and then the stock price, industry PE is 40, while this company is charging 84. That is double of the price to earning ratio as compared to its industry. That means the company is charging premium price. Now, the reason there is very simple. Look at here. Sales growth in last 5 years is 25%, while the profit is growing 46%, which is 2x of the sales. Now, consider this fact that if the company is the sales is growing only 25%, but the profit is growing double of that. That simply means that company has strong brands, it can charge premium prices, it has reduced its expenses, and it is managing its supply chain and distribution very well. That's why the company is earning more profit as compared to its sales growth. Coming to this, the numbers again, Pious key score is 5, which is comfortable. Graham number is 133, and according to that, the price 1330 is around 10x, which is absolutely premium price. An investor should not just jump into this. They should first wait for some price correction before making any positions. 63% is held by promoters over here, so completely in control with the business, is in control with the management, so no issues. Over here you can look at this particular chart, and I'll tell you how important it is. You can see these buildings which are growing are the buildings showing as EPS growth, earning per share. That simply, in other terms, I should say profit, net profit. So the profit is consistently growing, while the price is not having the significant growth as compared to this. So you see this gap? This gap creates a valuation gap. That simply means sooner or later this gap will be bridged and the price will start rising as the businesses. So this makes the company a somewhat undervalued, not much but somewhat, considering its price EPS growth. Now look at the competition, which is not competition because Bikaji Foods is in different, Zydus is in different industry, all these are in different industry. Consider them ignored. Now come here. Let's look at the recent results. So you can simply see that September quarter they were earning, sales was 3871, but in compared to that December quarter it is 2600. It is seasonal. So how would we compare it? We compare it with the last year's December quarter, and over here you see 2200 and now it is 2600. That simply means quarter on quarter the company has grown its sales. Look at the overall profit. Last year it was 82 crores in December, now it is 144 crores, which is 2x of the overall profit. So the profit has grown very significantly. Now look at the numbers in terms of the annual results. So 10 years back it was 1800 crores sales, now it is 16,000 crores. So that means it's approximately 10x of the sales, 10 times in 10 years. But look at the profit. 25 crores to 2100 crores. That means the profit has gone around 20x. So 10 times the sales has increased, 20 times the profit has increased, which gives the company a very, very comfortable position. Looking at the shareholding pattern, you can simply see the company's management is having above 60% shareholding. That means the business is in management's control only. Foreign institutional investors, they have analyzed the company and they found it useful, so they have started increasing their holding. So see, from 20% they have gone to 26.58%. Domestic investors, institutional investors, they also are maintaining around 3 to 5% to 6% of holding. But look at this pattern. Recently, they have increased their holding from 3.16 to 3.58%. That simply shows that these people know that the company is doing good. Looking at the company's, let's have a look at the company's latest results. One sec. So this is company's latest presentation. Let's have quickly run through it. So these are the PepsiCo's products which are distributed by Varun Beverages Limited. So Mountain Dew, Aquafina, Pepsi, 7up, Mirinda, Sting, all names are very well known brands. This is the distribution network. So all across India you can see the number of distribution centers. So 6 countries it's managing business. These are the brands licensed to VBL. All are strong brands, as you can simply see. And this is its flagship brand. 32 years of association with PepsiCo. Wonderful relationship. And 90% of sales volume is being managed by Varun Beverages only. Looking at this man, Mr. Ravi Jaipuria, he is a very well known business leader in Rajasthan. He runs, apart from Varun Beverages Limited, he runs educational institutes in the name of Delhi Public School. It's a part of that. So they are running some institutes in the Rajasthan region. So this man is in the social cause also. Now these are the quickly, I am just taking you to the numbers. So you can see quarter on quarter the net sales has increased by 20%. But if you look at the profit after tax, in the quarter on quarter basis, the profit has risen by say 76%. So sales by 20%, profit by 76%. That means companies are earning very good profit in the recent time. And you can see the profit after tax on year basis has also risen by 36%. So these are the key numbers of the company. Let's quickly look at the rest of the presentation. The company is in the sustainability also. So they are making sure that they maintain the water level intact. So they are taking some green initiatives to save water, to recharge the water in right way, and they are doing sustainable production. So plastic waste management is being done very effectively by them. So I don't want to get into more of the details because otherwise the video will be very long. So someday maybe in a different video we can discuss all those in length. But now coming to the ratings part. So here you can see PepsiCo's rating as per the CRISIL. The rating is AA+, which is very good because considering the AA+ is a very good rating. The reason for that is that the CRISIL consider the overall strengths of the company overweighs its weaknesses. So it says that it has a market leadership position and very geographically diversified business in domestic and international, especially the international business after the acquisition of this company known as the Beverages Company Limited South Africa, and it has acquired this in 1300 crore rupees. So now its geographical reach has increased. Plus the company is maintaining debt to EBITDA ratio at a very comfortable level, that is 1.2 times only, and CRISIL is monitoring that it keeps on reducing that. So considering the other things overall, there are so many things to discuss actually, but I'll just take them quick and minimum points only, important points. So operating income from last year it was 8,952 crores. Now it is 13,000 crores. So 9,000 to 13,000 crores is a big jump in operating income. Looking at the profit margin, this operating profit PAT, profit after tax, you can see that 746. The recent profit is double of that. So 746 last time and 1500 crore this time. So it is 2x of that. But this is not important. The important thing is that profit margin is improved from 8% to 11%. So margin improved means the company has improved its business, not just sales and profit. Plus the debt is gone from 0.92 to 0.80, which again is a very positive factor. Let's have a look at the technical charts and let's see what does the technical say about Varun Beverages Limited. So on your screen you see Varun Beverages Limited technical chart and you can see all those green candles over here. These green candles, it's a monthly chart. It simply shows that the company is in a bull trend, uptrend consistently, and which is complemented by the high rising volume. So volume is very important to consider any strength of any trend. With the rising volume, it clearly shows the company is going to continue with the bull run because the trading volume is supporting its trend. So friends, that was in nutshell the Varun Beverages Limited its overall analysis for this quarterly result. I just believe that this overall video might have given you some level of clarity about the business and you must have learned some new things in this video. If yes, then please like the video and support my efforts, and don't forget to subscribe this channel and click the bell icon so that my next video is delivered to you right in your inbox. So wonderful. Thank you so much for giving me that much of time. And yes friends, just share this video as much as possible on Telegram, WhatsApp, Instagram, Facebook and everywhere, because right analysis with thorough research is what actually help an investor, and by sharing this video with all your friends you will be helping them in some way or the other. So thank you very much for all that. Please like the video, share the video and subscribe to the channel, click bell icon, and I will see you in the next video very soon. Till then, take care and Jai Hind.